Welcome to the Cashflow Project podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project podcast. I'm your host, Steve Fieros with Tri-City Equity Group. Today, we're excited. I think we've got our first coach on the show. So we've got Coach Doug Peacock. So Doug is the CEO of Peacock Wealth Group. So he's a lifelong football coach and educator. He's helped thousands of families with, win the personal cash flow game, which, for a lot of us, that's the game we really want to win. The game plan recaptures the thousands of dollars paid to banks and other lending institutions to grow wealth safely and predictably in a tax-favored environment and into your personal financing system. Doug's especially effective with student loans and destroys them quicker than you ever thought possible. He's a college funding specialist. He coaches parents how to send students to their best schools without destroying retirement accounts and with as little out-of-pocket money as possible. Hey, as a dad of two young kids, that perks my ears up for sure. And some people have even found themselves getting every dollar they spend on college back into their cash flows during retirement. So that makes college funding extremely efficient. Coach Doug, hey, welcome to the show.
Thanks, Steve. I so appreciate your invitation and effort to get me on here. Thank you.
Yeah, no, absolutely. Absolutely. I appreciate you hopping on with us today. I know we're going to hope people find value in our conversation and they pick up something new and something they can apply towards their personal finances.
I may be the last coach you ever had on.
No, I appreciate you coming on. And for those of us that may not be familiar with your background and kind of how you got started, because obviously that's a big transition, fill us in. Like, how did you get started into, for one, coaching, but then also how did you make the jump into finances?
Well, I'm a big man. So I walk into the room and yes, I will be noticed. 6'6", 3.5 is not normal, not even in Indiana, but I wanted to coach football. I come from a very rural school. Nobody had been to college in my family. And the crazy part is these recruiters come in, and you got to understand, this is a long time ago, 45 years ago now, that I didn't understand scholarships. And nobody talked about it. There wasn't a big online presence of anything. And my coach was sitting there with me, and we finally walked out of the meeting. He says, "You don't have a clue what they told you." I said, "Coach, it sounds like to me that if I play football, they pay for college." He says, "That's all you got to remember." And so that was the goal at that point. Have somebody else pay for college, and I get to go play football and at the time get my degree where I can go coach at whatever level I want to. And no, that's how it all started. And you go through ups and downs of coaching, you go through ups and downs of communities. And so I coached a while here in Indiana. Then I wound up in Florida for 13 years. And then we had 3 kids, decided to move back home closer to family, grandmas and grandpas, aunts and uncles and cousins. And we were both from big families and had to have that. And so we moved back. I found somebody up here that would hire me. And my last 18 years were at Mount Vernon High School in Fortville, Indiana.
Awesome. Yeah. So it takes a village. Like that's for sure. Yeah. For the kids.
Sometimes it takes a football team.
That's probably more appropriate for you.
Absolutely.
So that's awesome. So you spent a long time coaching, obviously would have been in touch with a lot of families, a lot of students over the years. No doubt you kind of develop a heart for them as they kind of come up. What kind of challenges did you see with that? Kind of before we dive in there too, so that's your coaching background. Now, how did you get to the finance part? Because that's a whole nother game. Like coaching on the field versus coaching finance is completely different.
So unfortunately, my advisor told me 60 days before I'm walking out of a classroom forever, and he tells me I'm short of money for retirement. But yet I've done everything he told me to do because, and his excuse was he couldn't get the market to cooperate. And I wanted to start a tackling drill at that point. But I let him go. But there had to be a better way. And I looked into some things, and like a coach, I'm gonna find an answer. I'm gonna find somebody that's doing it the way I like to do it. Ask them enough questions that I can end up doing it myself. And now the challenge is do it better than they did it. And that's been coaching forever. I'll give you credit for 2 weeks, and then it's mine. But after, after that, we just did what we want. So I literally started in this business getting my former players out of student loan debt.
Mm-hmm.
And the more of them I talked to, the more of them had a problem. And I'm going, holy cow. I honestly had no idea how bad it was. No clue until I saw their numbers. And so we just sat down and talked. Well, I could treat them entirely different than I could treat anybody else on the planet, right? They knew me, I knew them. I was not going to lie to them. I'm not going to take advantage of them. Shucks. And so the bottom line is, in fact, we talked about you being in Hawaii. That's how I got to Hawaii. Is I actually won a trip through the company as I finished #1 in the company. And the crazy part was I was still part-time. I was still teaching, trying to get my Indiana teaching retirement. So I had to take a whole week off of school. Thank God my principal was kind. But so that's how it all worked. And of course, once the word got out, every kid that went to college that I helped, well, he played with 5 or 6 guys that was really close with. Well, the next thing, hey, go see coach, go see coach, go see. And it just became a big snowball, man. It just took off. And eventually mom and dad said, hey, time out. What are you doing with Junior? We want to know what's going on here. Because our average student loan was just a little over 5 years with about $25,000 sitting in that account when they were done to use at their discretion. That wasn't a bad place to be. Some of them had 6-figure student loans, his and hers, and they were both teachers. One of them was unfortunately a coach. But if they all turned on, it was $3,600 a month.
Wow.
And I asked them, what happens when you don't make $3,600 a month? Because I know as a beginning teacher, that summer's going to get thin. Anyway, it worked. Took us a little more than 5 years with them, a little over 7. But the value was they were both setting over $55,000 in that account when they were done.
Awesome.
So
That's awesome.
worth the effort, every bit.
Oh, 100%.
Every bit. Yep. So that's how I started. And then as it grew, then mom and dad wanted to know, well, hey, instead of taking out a Sally Mae, how do I pay for college? I didn't know. And so I found guys that could do that and learned it from them. And now I'm doing it. So it was just a progression of coaching philosophy into the money world. And I can coach you. If you don't see the problem, I can't solve. My solution doesn't matter. My solution doesn't matter. And that's okay. Not everybody could play football. I'm okay with that. Still true with what I do today. And guys have taught me it's okay to get a no, because now I don't have to waste a lot of time. They don't have to waste a lot of time. And it lets me find somebody that thinks like I think.
Right. Yeah, no, that's, I think there's so much that translates in it. Just as you were kind of sharing that, so much that carries over, let's say, from the coaching world was, hey, just like you would have dealt with coaching up the student athletes. Well, for one, you got to be coachable. You got to understand that, well, hey, there's something here I don't know that coach knows. And then so they have to kind of start with that premise. Because if you think you walk in for everything, then I can help you. You know it all. There's no need for you to be here with me. But Stephen, starting with the right mindset of, hey, there's a problem. We're gonna address that together. Let's coach you up, but you have to be willing to learn and understand. Hey, I don't know it all. Great, I'm gonna help you with that. And then cool. Let's copy repeat. Let's keep it going, and we'll get you better and better and better, and you'll see success on the field.
Again, my personal opinion is that our financial system is broke for the average American, and you don't have to learn it all. It is, in my opinion, it has deliberately been made confusing so you don't understand, so you don't ask questions because you don't want to look stupid. You know how I know this? Been there, done that, got the t-shirt. So the whole plan was I'm literally going to coach people just like football. The nice part about it was, though, in football, I controlled your playing time. Do you really want to play the game, or you just want to practice all week? What's the purpose of that? And so the truth is, in money, I will never tell you what to do with your money, but I'm really going to make sure you understand why you're doing what you're doing. And that's the key.
Well, that's the thing
Oh,
too. People have to get off the sidelines too. There's too many
and
people
some
there.
people don't want to.
Yeah,
And
yeah.
that's okay. And that's okay too. There's other plans for them, but I don't do those.
Well, yeah, I was going to say you can choose not to play the game, but understand that the game is going to be played with or without your cooperation.
I mean, I truly believe not only that it's broken, but I truly believe we're playing a game we don't know the rules to. I truly believe that we're playing a game that we cannot. It was not designed for us to win.
Right.
And I think nobody knows that till they hit that retirement check.
Yeah, and I was going to say exactly that. It's like you're not aware of playing the game. You don't know the rules, and then you don't find any of it out until you see the final score.
Yep.
And by then it's too late,
Yep.
right? Like you end up in the situation that you were in, faced with, okay, well, wait a minute, I'm supposed to walk off into the sunset after a long career, and this is what I'm working with. Hey, wait a minute, like I thought I should be good here, right? I was doing the right things, checking the right boxes, got my degree, had a stable career for decades.
Yeah.
We should be good.
Yeah.
I think that's a situation that a lot of people find themselves in today. And then I'd be genuinely curious. I know you're going over, let's say, the student debt and the loans and whatnot with a lot of them. The loans that the people are having now are insane. Like the student debt that a lot of these colleges and whatnot are getting people into. It's incredible. If you're in the right career and you can earn with it, that's one thing. And even that's pretty high. But for most people, I don't think that's the case. You're exactly what you position, where it's like, well, hey, you went to school to be a teacher. Let's say you're coaching up clients, and wait a minute, you're in how much student debt? And that's
Right.
versus what's the earning potential there, right?
Right. So now we've also got the argument that going 45 years ago, going to college and getting a job within your degree area was not a problem.
Mm-hmm.
That's a huge problem today. We got a bunch of people walking around with degrees that aren't using them.
Yep.
And now all of a sudden, Sally Mae still wants her money.
Mm.
Doesn't matter that you haven't worked since you left college. It doesn't. And the idea that a president can waive those is a total lie. So I'm not going to get political. I'm not going there, but doggone, that's a lie. And you got to realize when people are lying to you. And if you can't figure it out, call me. I'll tell you. I'm not going to lie to you. But I want you to understand what you've got. You've got to pay the bank. You can't even bankrupt that thing.
Mm-hmm.
We have people, think about this. We have people in the United States that are having their Social Security checks garnished because of student loans.
Oh, wow. Wow, that's brutal. That's supposed to be your safety net. Wow.
Well, who signed up for that?
Yeah.
Nobody.
I don't think anybody. Yeah, not willingly. Who would, right?
Yeah. So
no, that's good. And so I think you're right. It's like they're playing a game, for one, that they don't know the rules to. And then you've got a system, like I think you said, like how you mentioned earlier, and this is a commonality between, let's say, coaching and you can never win the game that you're not even aware, for one, that you're playing. And then two, if you find out you're playing the game, you don't know the rules to. And it's effectively, it's an unwinnable game. And so you have to, and you mentioned it earlier, let's say, and this is not even getting political, but guys, any of our listeners, right? You're watching, if you're listening, if you can trust literally any politician you can't trust any of them. You have to take control of that. It doesn't matter what side of the political aisle you sit. Only you can control the game that you're playing. You have to take control of the reins. It does not matter who's in office, because guess what? The next guy's going to be there for 4 years or 8 years max. And so it doesn't matter. You're going to live a life longer than that. Just like Doug had a 40-year coaching career, guess what? Your career is going to be, ideally, is going to be a long stretch too. And so you got to understand what are you going to do for you? You have to take control. So you can't trust the institutions. You can't trust any of them to set up your retirement, to set you up for success. Only you can do that. So
90% of America has a qualified retirement account that when they finally retired, they're going to get paid 7th in line.
Wow.
Why? Because you gave up control of your money. That's one of our tenets. You must control your money. Now, if you don't want to control your money and you don't want to pay attention, jump in that qualified account. They'll take care of you. But you don't have near the money you think you're going to. It's going to be taxable. The advisor's going to get paid forever. Even when you lose your shirt, he's going to get paid. Oh, and by the way, those fees, taxes, and fees for the advisor are coming out of your account balance, not from the company. This is the stuff I learned, unfortunately, as I was going through the process.
Right.
The nice part about it is I did it long enough that I had pensions from 2 states, and I'll get by. But the bottom line is coaching was still calling me, and now all of a sudden I can teach people how to build wealth without taxes, without fees, independently of Wall Street. And now all of a sudden, holy cow, this has got a chance. And I had no idea what I was doing. I've never been in business. I had no idea. And it took off like a rocket, and it became, oh my gosh, what am I doing?
Oh, that's great. When people do business with who they know and they like and they trust. And so if they know you, they like you, obviously you got their best interests in mind. And I think anybody working in that space, you're going to get clients. So
90% of my clientele when I first started was players.
Yeah, that's awesome.
So it was given.
Yeah, you got a perfect niche because you speak the language, they trust you, you understand you. Why would you go to somebody that didn't play or along those lines, right? That's kind of the thought.
I'll help anyone.
Sure.
And I want people to understand, to me, that's the advantage. I didn't come into this as a businessman with a few $100,000 to sit down and put this thing together and do that. No, I was a retired teacher.
Mm-hmm.
Come on. We all know what that means financially. And yet it still works for me. It still works. And it's to me, it's fabulous.
Yeah, that's awesome. So I like your comment there. You say, well, I'll still get by. And it's like, I think that's a question that a lot of people need to ask themselves. It's like, or are you okay with just getting by, or do you want something more? And that's, I think that only the individual can ask that, to answer that. But a lot of times it's like, well, we just had a meetup last night here locally. And so I got a chance to connect with some people, but I've heard this story many times. Hey, my parents are getting older and now I got to take care of somebody else other than me. I got to take care of them. Do you have resources to do that? Hey, my wife and I, we're good, but we've got a couple of kids, great, family's good. Oh man, we had one more unexpected child. Or guess what? We had to take care of somebody else's kid because they couldn't take care of it. It was and so it's like, do you have resources to do above and beyond you just getting by, or would you like to? Because for everybody, it's not. Well, hey, obviously, we live in Hawaii. I'm in a beautiful place. Some people don't have any desire to travel, but do you want to make an impact in your local community? Well, do you have the resources to do that? Would you like to have the resources to do that? Right? And so, so again, only you, listener, only you, whoever's tuning in, only you can answer the question for you. Are you okay with just getting by? And I've heard that many times. Well, I'm good, Steve. I'm good. Well, hey, that's only I can't make a decision for you. Just like coach can't make you to be coachable. You have to be willing to be coachable and say, hey, I got a problem. We got to solve it. What can you do for me?
So we believe everybody needs a storehouse. And the bottom line is I can't pick that for you. You've got to decide. And the very first question is, what do you want your money to do? Give it a job. Don't let it just wander around or somebody else is going to take it from you. I guarantee you.
That's good. Yep.
So what do you want your money to do? Well, I'm going to pick out some things. I want a guaranteed growth. In fact, I want guaranteed growth more each and every year that I leave it in there. So it's going to grow more next year than it did this year. I want tax-free growth. I want liquidity. In other words, I can access the money without taxes, without penalties. I'm going to keep it private. In other words, it's going to be off the radar screen of creditors and the IRS. Legally, you don't have to wear an orange jumpsuit to do this. And the crazy part is, once you learn the tax code, which I will teach to you, is possibly millions of dollars of tax-exempt cash flow during your retirement that never has to be claimed as income. And when you die, all bets are off. The loans are paid back. Your wife still gets a huge chunk of money. She hires the pool boy and they're off and running. but my point is, everybody's got to have a storehouse that you must decide where that's going to be, because where you put that money determines how many more checks you're going to write to the United States Treasury. The IRS code says I have to pay income tax once, when I earn the money. Most Americans pay it for all their life. Nobody's taught you the difference. I want to pay it once. You can believe whatever you want, but if you believe like I believe, then let's talk. The decision also determines of your storehouse how long you pay fees on an account.
Mm.
And this gets really frustrating for a lot of people because, well, he's a nice guy. Well, I really trust him. Do you understand that your advisor, when you lose your shirt in the market, he still gets paid? Are you okay with that? If your answer is yes, I do not have your solution. I cannot help you. I want my guys earning their money, right? So my point is there's people that are going to pay fees for their lifetime, all right? Because as long as they own that account, the fees will be charged. And again, right back to this 3 guarantees of a 401k, 403b, IRA, whatever you want to pick. The government gets theirs, your advisor gets theirs, and you're going to pay them both out of your account. No, whoops, they forgot to tell you that. And so how did all this happen, Steve? We gave up control. The very thing that you talked about when we started. Not the control associated with stocks or interest rates or somebody's approval, real control. Know where your money is, know what it's doing. Can you access it without permission or qualifying for it? Oh my gosh. So let's get into a little bit of details if we can. I don't know how we're going to do this, but hey, we're going to give it a shot. So my storehouse, where do I store my money? It's in an asset, uninterrupted, guaranteed compound growth. Now, everybody talks about compound growth, and they show you this nice arc going way up, and then, man, at the end, it's almost vertical. The problem is, as soon as you interrupt that, you just got rid of your curve. So what can interrupt that? Market crash? I need a new washer and dryer? Emergencies happen. Medical, parents, the thing that you talked about earlier, I went through with both of them with that. And I do want you to understand that I wanted to earn that money each and every year that cannot stop growing, tax favored, as long as I own it. And nobody's ever told you how to do that. The number one draw on retirees, having less money when they retire, is taxes. How come nobody talks to you about taxes? And we're going to defer taxes today so the taxes can be lower in the future. Good luck with that. Anyway, that's a whole other lesson that I don't really want to do right now. So the thing is, my storehouse is a 200-year-old asset, and it's called dividend-paying whole life insurance. Now, before you quit and before you take shots at the computer and stuff like that, I understand you've been taught to hate that. That's not by chance. Because most people, I want you to understand, it's not an investment. It is insurance. But most people have no clue what that insurance can do for them. So first, never use insurance as an investment. Never.
That's good.
Find someplace else. I don't care. Bitcoin, gold, real estate, whatever. I got guys who buy cows, grass-fed beef, huge in Indiana. I got another guy that buys fountain pens. I had no idea there was a fountain pen collection society, but I learned a lot. Bottom line is, know your investment. If you don't know real estate, don't go buy real estate. Find somebody that knows real estate that you know, like, and trust, particularly if they're a former player, and you can work your way into real estate that way. But there's somebody in your life somewhere that will help you do that. And it doesn't cost you millions, just costs you a little bit of money. But it's, the bottom line is, generally, if you buy it right, real estate can be good to you. But I'm not here for real estate. I do want you to understand that the difference between insurance and investment determines how the IRS treats this tax-wise. There are 5 tax codes that mention tax-exempt. That means there's no place on a 1040 to even put those numbers. Not tax deferred, not tax free, tax exempt. And we've never been taught that. What if your entire retirement was that way? And you never had to pay a dime of income tax on your retirement. Did your retirement just improve? Yeah, what's your tax bracket? 28%. Congratulations. Your retirement just went up 28%. No fees, no taxes, no opportunity costs, which we'll talk about later if we need to. But the bottom line is you control that money. So why would I buy, good Lord, why would I buy life insurance? Because everybody says that's the worst place to put your money. I will tell you how I learned this. And you can be as mad at me as you want, or I don't care. I've been called every word. In 40 years of coaching, you get called some things that you didn't even know existed. But the bottom line is, do banks know how to make money? Let's talk about banks for a minute. Because they all own the tallest buildings downtown. They own the most prominent street corners in your community. Do banks buy fee-laden mutual funds, target date funds, CDs, money markets like they sell you? No, not a one. So where do banks keep their wealth? And here's a term that I learned. It's called BOLI, B-O-L-I. It's bank-owned life insurance. Banks are the number one purchaser of cash value life insurance on the planet. Shucks, one time out. I thought you told me I didn't want this thing, but yet the guy in the neighborhood that's making all the money has a boatload of it. Banks use cash value as tier one assets. Tier one assets must be safe, they must be dependable, and not at risk. I think I would like that too. Don't make this hard, right?
Right.
The FDIC reports that about 3,800 banks own more than $190 billion of cash value life insurance. Why? Growth guaranteed to grow more each year. You heard that before? Tax-free growth. Heard that before? Liquidity without taxes and penalties. Privacy off the radar screen of creditors, predators, judgments, and IRS. Any of those things sound familiar that we talked about a while ago? For my Storehouse, I think I found the perfect place to storehouse my money. Bank of America, $22 billion worth. Citibank, $6 billion. JP Morgan Chase, $11 billion. And Wells Fargo, $19 billion. That's the big four. Great Depression, the Federal Reserve notes about 9,000 banks went out of business. It also noted that 2% of insurance companies were ever impaired. That means their money to cover their debts got close. Insurance companies answer to a different bell, by the way. Must be 100%. In fact, every company that we use is 108% or higher. So in the Great Recession, 450 banks went under. Back in a little more common that a lot of people will remember. And less than 1% of insurance companies never reached even an impaired spot. 0 bankruptcies and no bailouts. Now, where do you want your money? We used to think banks were it, right? I don't think so. So anyway, I don't think this is a do-it-yourself project. I think you need somebody to coach you through it. And I'm going to give you some tips why. You got to use a mutual life insurance company. It's got to be an A-rated company. It's got to be around for 100 plus years. And it's had to have paid a dividend 100 plus years consecutively. I can show you companies that can't do 2 years consecutively. And yet these companies are doing 100 plus.
Yeah.
We have one company that's paid dividend for 117 years. Now, think about that. Because that means somebody got a dividend check in the Great Depression. The joke is, where did they cash it? Because all the banks were closed. I still don't have a good answer for that.
Actually, thanks for pointing that out. Like the long, I guess I never even thought about that too, even though I've heard of, kind of gone down this rabbit hole a few times. Like the longevity of the companies themselves, because there's very few companies as successful as we've had. All of the thousands and thousands and thousands of companies that have ever existed, how many of them are around for a century or longer? That itself is very impressive. And I actually like your distinction between not having the insurance, let's say, as an investment vehicle, although I know you can use it for certain like that. I think that the distinction, I think, is key. Like you keep mentioning Exactly. I was going to say, you keep mentioning Storehouse, and I actually think that that is an appropriate, that's a more than appropriate name for it, because it's the safety of that, right? And so many people during the GFC had their retirement accounts wiped out, and it's like exactly because it was not that. It wasn't the Storehouse, right? It was. Hey, man, I'm keeping my cash under the mattress effectively, where somebody can come and burn it down or find it and they steal it or whatever. It's not a safe spot. And so, yeah, no, I actually think I really appreciate you making that distinction. I think you're the first one I've ever talked to specifically in life insurance that has made that distinction. And I think that's actually really, really good.
I think it's critical. I think it also must be a mutual company, and nobody understands that, because mutual companies have no stockholders.
Mm-hmm.
So when a dividend is declared, that has to be paid. But if there's no stockholders, who must it go to? Policy. Oh, by the way, that's me and you. I'm literally a co-owner, very small slice of that insurance company.
Yeah.
Shucks. Again, dividends are not guaranteed. But the company I'm going to put you with has paid them for the last 117. Track record's pretty good. Think about that. They've come through the Depression, recession. They've come through the Spanish flu. Our rates didn't even change when COVID showed up. And I was honestly in a panic. I thought, man, we're going to have to redo everything we do. And I finally asked it to one of the VPs, and he says, no, are you kidding me? We had this covered in 1913. My bad. Wasn't around then. But so the policies are unique. I will tell you this. We only use whole life. There's a lot of people twisting numbers and making them look really, really pretty out there. And if you want to get into it, I'll tell you why not to use those. Use whole life that are specially designed, maximum cash value, minimum death benefit, decreased commissions, which is where all the money goes to in the traditional whole life policy. The reason you don't have any cash value years 1 through 4, because all that money goes to your agent. That was his commissions. Well, we're going to have cash value in our policies in 30 days, available for you to use whatever you want to use it for. So I know we're kind of flying through this, but man, what a great place to store your money.
Yeah, for sure.
Because we do stupid stuff with money. Would you really go buy a car at 18 and not drive it till 59 and a half?
Yeah, no, can't say that I would.
Man, I'm driving that sucker home. Are you kidding? Yeah. That's a qualified plan. That's an IRA. That's a 401k. Think about what you're doing.
And they actually will take that money and they're going to go make money with it and they're collecting fees the whole way too. And so they're double dipping with you, with your money, but you're not able to access it you already paid taxes on it going in for a bunch of them. You were touching on this earlier. It's like, well, why would I continue to pay taxes on it again? I already paid taxes on it.
Right.
Like it's just, yeah.
People do not understand the tax exemptions allowed life insurance.
Mm-hmm.
And again, there's 5 of them. You want to talk about them? Call me. Well, I'll share them all with you. But the bottom line is, you don't have to pay income tax every year of your life. Yeah. Only on your income. That's why when I said retirement cash flow, I didn't call it retirement income. Because if it's retirement income must be taxed.
That's a good distinction. That's actually really good.
I'm not doing that. Oh, and by the way, those dividends jump into your account. No sales charge, no taxes, all your advantage. The only thing is your cash value goes up, so does your death benefit. By the time you've been in this thing a few years, you have more money than you could have ever saved because it can't back up. Remember, it's going to compound. We're not going to interrupt the compounding of this money.
Mm-hmm.
And you can't do that anywhere else on the planet. So when that happens, the death benefit must also go up. And that's to keep it as insurance. If the cash value ever gets higher than the death benefit, it's not insurance anymore. It's an investment, and you're going to be taxed like an investment. Mm-hmm. So they will always grow. So the truthfully is, by the time you hit retirement, you have more money to retire on, tax exempt, and more death benefit than you could have ever qualified year 1 to buy or to pay for or qualify through the company. But once you're in, they've got to continue to honor your premium. Now, The other part about this that's different is I can leverage that cash value.
Right.
Right? I can go in and say, I got this amount of cash value. I want to borrow X amount for a car. I'm going to borrow the insurance company's money, not mine. Why?
Right.
My money's too valuable. Why? Because it's growing. I'm not interrupting that compound interest, right? I'm earning compound interest. I will take a loan from the insurance company at simple interest and buy that car. Then I'll decide how I want to pay it back. I'll decide the premium, how much I pay, when I pay it. If I have a couple, 3 bad months and I don't have to pay it, nobody's calling for the car, right? I control all of that. Now, I will admit I was not a business guy. I was not a banking guy, but I just assumed that $30,000 at 5% for 5 years, growing that money was the same number as $30,000 at 5% for 5 years, paying that money. Compound versus simple.
Yeah. Very different.
I flunked that test. I'm just going to tell you, I flunked that one because it ain't even close. Guys, there's
Right.
$4,200 difference on $30,000 in 5 years. That was huge money to a teacher, to a coach. I can make $4,200 to finance my own car. How many cars do I want to buy? Mama's real happy. Mama got a nice car, right? But man, that money continues like I never touched it because I didn't touch it.
Right. Yeah.
Leveraging it to use the insurance company's money. Oh, by the way, I don't have to qualify for that. I don't have to put up anything for collateral. It's already done.
It's not affecting your credit score. It's not affecting your DTI. You didn't have to check with anybody
never
for
going
it.
to a credit resource. It's nothing. And so the bottom line is, what happens if I die? I took $100,000 loan, walk out and get hit by a bus.
Right.
Well, I got the $100,000 already. So they take $100,000 off the death benefit and give my wife. She ain't crying. I thought, can you act kind of sad for a day or two, maybe?
Well, she's at least not mad at you for having
the nice part is
left her behind.
She understands this as well as I do.
Right.
And I will tell you, Steve, so do my kids. I got 3 kids. So my kids all have policies. I have policies on my kids, right? Because it's another way to use money.
Yeah.
That I don't have to qualify for. I don't have to worry about my credit rating. I don't even know what it is. Don't care. Because I know what's available. 1-800, send me some money.
No, and that's a huge deal, I think, for the privacy, because there's going to be people who are like, well, I'm not super interested in, let's say, all the exotic investments, all that kind of stuff. It's like, well, hey, I appreciate and I prefer the privacy. And so just like that, it's like, well, hey, man, your social's not out there for the banks to see. It's not affecting your credit. They don't see the recorded loans or whatever, right? It's all private. And so it's off the books. It's all legit, but it's not like it's under the table thing. It's recorded to you. You're dealing with yourself.
It's been done for a couple of 100 years.
Yeah.
They would have caught on by now if they were going to stop it. In fact, the last time Congress changed it, they made it better. That's a whole nother lesson.
Yeah, I'm sure to their benefit, but the nice thing is it's to your benefit also.
Absolutely. Well, they'll never get rid of it because they all own it.
Yeah.
Right? Mitt Romney lived the life of a billionaire, but paid like a 13% tax bracket. How is that going on?
Right. Yeah.
His money was coming in tax exempt.
Yeah. That's it. Like I said, that's a key.
And there's
key
so
differentiator.
many things you can do it. Like I'm saying. So back to Storehouse. A lot of people know that every real estate deal you get pitched is not the one you want to buy. Right? Sometimes I know, pass. So what do you do with that money? And it just sits there somewhere at 1% or something like that? No.
Joke.
Cash value, let it earn forever now, even for your grandkids. Got it? And it's available in the next deal that comes along. So here's the other crazy part. So I have 3 kids. I already told you. They have a policy. I have a policy on them. I have 6 grandkids. Who do you think owns a policy on all 6 grandkids? I mean, how much does it cost to insure a 1-year-old?
Yeah.
Nothing. And now all of a sudden I have another bucket of tax-exempt money that I can get to do whatever I want to do. Let that thing run for 20 years. That's going to be a hell of a graduation present.
Yep.
Whatever. If they've done things and become a productive member of the community, then great. Let's sign this thing over. I signed one line. It's their policy now.
Mm-hmm.
Tax exempt, come on.
As good as it can be. Yeah, for sure. No, that's
Absolutely.
awesome. That's
Absolutely.
awesome.
And now, if they turned out to be a crackhead and they can't do things right and those kind of things, they don't even know that policy exists.
Right.
Right? No, Grandpa's using that sucker. We're gonna have a nice vacation this year.
That's funny.
I hope I've opened the world for some people because I didn't understand any of this when I started.
Yeah. No, yeah, and you've had quite the journey there. And actually, like I said, I think you can help change my perspective a little bit on that. And I've talked to a few different people kind of working in the space, but no, actually, I do appreciate the approach and the distinction. So it's actually, yeah, it's really good. So, Coach, if people want to, listeners, hey, they want to reach out and they're like, actually, that's actually really interesting to me. I want to know some more about it. Like, what's the best way for them to do that? How can they get in touch with you?
Yeah, there's two ways. The website is peacockwealthgroup.com, and you're going to get everything there. It is not your basic, here's where I started lesson that we just talked about.
Yeah.
So you're going to hear about college funding. You're going to hear about everything on that page. There is a book there called Be a Bank. I guarantee you there are English teachers at every school I ever taught at that are just shuddering knowing that I wrote a book. Because it is not written as a literary piece. It is written to coach you through some basic fundamentals of safe money. And that's what I wanted to do. It's not pretty. It does what it's supposed to do. But in all honesty, I had to set myself apart from coaching football, because what football coach knows anything about money? So here's what I believe. Here's why I believe it. Here's how I want to share how I believe it. Here's what you can expect when you do what I believe. Do you believe like me? You get through those 5 things, and man, we need to talk. There's also phone numbers listed there. You can call those. I will tell you that since 2020, the staff's gone. You're going to have to leave a message because I ain't answering numbers I don't know. But if you'll leave a message, hey, I heard you on Tri-City Equity Group podcast. Can we talk? Yes, I'll call you back. I promise. And please understand, I'm not going to come at you like a financial professional. I'm not going to hound you. I'm not going to chase you. I'm not going to do any of the things we hate financial guys for. I'm going to coach you. What do you want your money to do? It gets down to, do you want it taxable or not taxable? If you choose taxable, I probably can't help you. There's people that need to do that. I got that. I had a gal tell me one day that she didn't mind paying taxes. I could have lived off the ring she had on her finger, but she didn't mind paying taxes. I said, good luck. Early in my career, I would have chased her forever because I knew she had money. But if she doesn't see the problem, I don't have the solution.
Yeah.
All right.
Very good. Well, guys, yeah, it's if you guys want to reach out and talk to Coach Doug and have him coach you up on how you can build up this tax-free wealth, and actually, like I said, really coach you up, because again, I've had thousands of conversations, and there's stuff in our conversation here today that were even eye-opening for me. So I greatly appreciate you, Coach Doug. And so for all the listeners, make sure you guys reach out. We'll make sure we leave his site in the show notes so you guys can check that out, or you can go to the site now and kind of check him out, reach out. And I'm sure Doug would be glad to help coach you up with your personal finances, set you up for success. But Coach, it's been awesome having you on the show. I greatly appreciate you and our conversation. And it's been valuable to me. I've learned some stuff, and I know our listeners have too. So thanks for jumping on with us today. And,
absolutely, Steve. I hope you and your audience have learned something, or at least piqued your interest in something. Maybe I can do this. Shucks, a football coach can do this. You can. I'm just telling you.
Yeah, no, for sure. And so I appreciate it. Thanks so much for hopping on with us today. And we'll check in with you in the future and see. Hopefully you got some good success stories.
Oh, every day.
Awesome. Thanks so much.
Yes, sir. Thank you.
All right, great conversation with Coach Doug Peacock with Peacock Wealth Group. Actually, really good. I'm very insightful conversation. I've had a lot of conversations with a lot of life insurance agents over the years, infinite banking. There's a lot of different kind of terminology for similar policies, but I think the visualization of the Storehouse, I think it's completely appropriate. And I think from that perspective, it's really, really helpful. So I appreciate his take on using the life insurance policies in that way. And they can be used for investing in like personal banking, but I think the idea of it is differentiating it between as a Storehouse versus an investment vehicle. I think it's absolutely pivotal. So, but yeah, if you guys want to reach out to him, be sure you do that. If you guys are interested in connecting with us here locally, check out our group, Honolulu Multifamily and more. We've got meetups every month. So we'd love to be able to connect with you and meet you in person, kind of help go over different things with you, just in terms of, hey, what's possible, what's available. A lot of times it's just a mindset change that we need to go up to the next level. If you guys are interested in our multifamily assets, learning more about our track record through that, going that and that avenue in terms of investing, you can go to tricityequity.com to learn more about our previous deals, current deals that we are operating. And we'd love to be able to help you in that aspect as well. And guys, if y'all are finding value in the podcast, we'd absolutely love a 5-star review. We'd love if you hit that subscribe button, if you hit the like button, leave us some love, and we'd greatly appreciate it. So we continue to get out great messages like this one to other people, other investors, so they can have a life-changing impact. But that's going to be it for me today, guys. We'll see you on the next episode. Hopefully you guys found some value in that one and go out, take some action. We'll see you on the next one. Aloha.